President Trump is floating the idea of a 50-year mortgage, and he's comparing it to when President Roosevelt introduced the 30-year mortgage nearly a century ago. Big ideas, but also big consequences. Let's talk about what a change like this could really mean for homebuyers, homeowners, and our entire housing market. The country is dealing with affordability pressure. Prices stay high, rates are stubborn, and people feel boxed out. A 50-year mortgage sounds like a simple fix. Stretch the term, lower the payment, make the home affordable. On paper, it looks good. Trump compared his idea to Roosevelt creating the 30-year mortgage during the New Deal. And yes, that move changed housing forever. It stabilized borrowing and made long-term homeownership possible for millions. But today's market, regulation, and lending environment are very different from the 1930s. A new mortgage product today comes with ripple effects that reach far beyond lower payments. Let's start with the upside. A 50-year mortgage would lower the monthly payment. It could give first-time buyers more breathing room. It might even stimulate construction if more people qualify. From a pure payment standpoint, it feels like relief. Here's the trade-off. When the payment goes down, total interest cost goes way up. A 50-year mortgage also slows how quickly you build equity. And longer terms can push home prices even higher because more buyers qualify at higher prices. I've seen how far lenders will stretch to make the payment work. From 2001 to 2007, I lived through the peak of creative financing. We used every tool available to get people payments they could manage. Interest-only loans, negative amortization, 40-year terms, and you know how that ended, the 2008 financial crisis. Back then, even the 40-year mortgages weren't true 40-year loans. Most carried balloon payments because they were due in 30. That wasn't long-term stability. It was a timer. If a 50-year mortgage ever becomes mainstream, it won't crash the market on its own, but it will change how Americans build wealth. More time paying interest, slower equity growth, higher lifetime cost, and depending on demand, it could fuel higher home prices. So the question isn't, can it lower payments? It's, does it help people long term? A longer mortgage is a tool, nothing more. It helps some people and it hurts others. Before anyone jumps in, they need to know the whole picture. That's why guidance matters, especially in a market that shifts fast. And if you ever need someone to walk through options clearly and honestly, I'm here to help you keep things simple for your stress-free home loan. If you found this helpful, subscribe and follow for more straight, clear mortgage breakdowns. And if you have questions about this or anything else, leave them in the comments.